Hey, what's going on, everyone? This is Stephen Place with Insiders Exposed, and today we're going to look at an insider transaction that has a hidden trap in it. For those of you that don't know, one of the best ways to find and identify and trade and profit from stocks before the news comes out is to follow insider transactions. And we look for insiders who are buying with conviction, with serious size, and we want to see multiple insiders every once in a while too. Yet there are some hidden traps that you do have to avoid when looking at these. A good example would be something like a stock that just had an IPO. You would see a lot of insider buys, but what they really are just shares that have been pre-allocated to those insiders into the IPO. So we went through a Form 4, which is how insiders register their transactions, and this one has a great case study on things to avoid, things to watch out for. This doesn't necessarily make the stock a bad buy or a bad trade. It just doesn't fit the criteria that we look for when we look at insider transactions. So this is an example of a Form 4. And remember, insider trading isn't illegal. They just have certain disclosure and reporting requirements, and you have something called Rule 10b5-1, where there is a trading plan at a brokerage firm that allows these insiders to purchase stock. All right, so it's kind of the Wild West out there, right? But you do have to disclose, and this is one where we do have a nice trap that's hidden in here. So this is from Matthew Ramsey. Matthew Ramsey is a director. He's a chief operating officer over at Energy Transfer LP, which is an oil company. I'm pretty sure I got all that right. And as you can see, it shows table 1 right here, non-derivative securities acquired, disposed of, or beneficially owned. That means what did you buy or sell? Okay. And on the 10th of December, he bought 33,000 shares at a share price of about $7.50. All right, so I'm just gonna do the math really quick for you. If you have 33,561 times 745, that's about $250,000 buy. All right, that's good size. Someone's betting $250,000 on their stock, right? Well, this is where the trap gets put in place, and in order to follow this, you do have to look at the Form 4s in detail. And right here, I think, yeah, it's just above my screen, and I know it's hard to see, so we'll see if we can zoom in. Right here. There is this table that is the derivative securities acquired. So if there was an options exercise, or if there were warrants or things along those lines, it would be recorded here. And these are phantom units. So phantom units are normally for private companies. Basically stocks that are pre-IPO or don't have a whole lot of funding yet, or they are for very closely held public companies. And phantom units are basically things that you give to employees that allow them to participate in the upside of the company, but they don't have any voting rights attached to it. That way they can't participate in the governance. So you issue phantom units if you want your employees to benefit from the upside of the stock, but there is normally a vesting schedule and things like that where these phantom units at some point can be converted into common shares. And that's pretty much what happened here. These phantom units were converted into common units of stock. A derivative was converted. So this is more like an RSO or just a share purchase plan. I'm trying to remember the actual legal terms for this. It's basically a share compensation structure for this person. So they're not using their own money. They're not betting in serious size. It's that this person was paid in stock, in phantom units of stock that he then upconverted into common shares. And then that allows him to have voting capacity and capabilities. So it's, again, it doesn't make the company a bad long or a bad investment. It's just outside of the criteria that we look for. And these are the things that you have to avoid if you're going to look at insider trading and insider buys for identifying massive movement to the upside in these stocks. If you would like to learn more about our screening procedures for this and why insider trading is so powerful and how it's legal and why we can ethically steal these trades, there is a free webinar, a free masterclass that you can go watch right now that will give you all the details about how this works. There's a ton of case studies involved, a lot of amazing stories, amazing turnaround stories as well in a lot of companies. So below this video is a way you can access that. Then you can join Insiders Exposed, which is the best way to follow insider trading, where you work with me and my team as a client, and we show you the trades that we think offer the best upside possibilities right now. So go watch this webinar right now, and I will see you on the other side. Have a great day.